TikTok, we got Facebook, we got Instagram, we got
YouTube.
Now we have YouTube. Welcome everybody.
In the house.
You guys know the name of the game. We're talking about real estate. We're talking about home loans. We're talking about interest rates and any other topic that comes to mind. I know there's a lot in the news right now. There's a lot in the news. So many things. So many things going on outside of real estate that's keeping everyone distracted. I don't know what the reasoning is. There's a lot of conspiracy out there. But that being said, we're here to help you with your home loans. So let us know the questions. Let us know where you're at. Let us know your challenges. Ask us questions about your situation or your scenarios. We are here to help. What about you, Mr. Finance Man? What you got to say?
Not a whole lot, man. Just get people a house this month.
Year?
This
month?
year.
Okay.
Well, have you seen the FOMC? So they actually put on their website when they plan the interest rate reduction cuts, and they put in 2024 they plan 3.
Mm-hmm.
They plan 5 in 25. And then they plan 3 more in 26. So this goes all the way out to 26. And when they look at it, it goes down every step of the way.
So this is a long game.
It's not a short game. That's for damn sure. It's before they get to the 2% inflation, they have it going really slow and steady. And slow and steady is probably the right thing. But what that means is there's not going to be dramatic changes in the market.
Andy the GOAT.
What's up, Mr. Man? Series 7. What in the world? Andy the GOAT.
So how many in this year? 2?
Andy, do I know you? I think I was a stockbroker with you. I am thinking that I was a stockbroker with you way back when, we'll call it the Wolf of Wall Street days, and Biltmore Securities, Stratton Oakmont, Parker Madison. Do any of those names ring a bell? Anyway. What do you got? How about you?
How about me? Well, how many did they say in 24?
In 24, 3 interest rate reductions. And they're still there. They're still saying that this is it. Well, all the Fed, and they actually speak. Some of them speak this week. Some of the Fed members speak this week. And some of them have gone as far as saying, hey, listen, we believe there's going to be 7. One of the Fed members said 7 interest rate reduction cuts. But he didn't speak for the whole group. He was just speaking for himself. Some of them are saying, but the one that they put out for the whole group is 3. And Jerome Powell comes out and he's very cautious about what he says. I mean, he knows when he speaks, he moves markets. And not a little bit.
Hey, let's do something a little different.
Tell me.
A little different. Let's do a commercial now.
If you need a badass loan, call a badass loan officer. You can reach them at New American Funding. Chris and Lee are on the phone numbers that you see right here. Just call them and we will help you.
Take a screenshot, guys. 1, 2, 3, 4.
Bye. Andrew the GOAT says psych.
Psych about the reductions? What do you think, Andy? What's going to happen? What's your predictions based on your knowledges?
Yeah, so right now, what are the rates? Pull up the rates real quick. So interest rates have gone kind of flat and the market freaked out. When PCE came in, they freaked out. PCE comes in again this week. I think it's this week. PCE is probably the most important when it comes to the Fed making the decisions on where the interest rates are going, which means that's how you're going to get a house. You get a house based off of how much money do I have saved up, and there are zero down programs, so you don't absolutely need any money saved up. You can actually get in with the zero down program. The other part is, what is the debt to income ratio? So your income is your income, whatever that is, but the big factor is the interest rates.
Mariana says, it's true. House is going down on May. Mariana, give me your reasoning. We don't agree with you, but give us your reasoning why you believe the housing market's going down in May and why May specific.
Yeah. Mariana, I don't agree with you, and I'll give you my case. I hope you give me yours because I really want to hear it. I really do. And I've heard, and bear in mind, we've been doing this for, I started in 1992. He started in 2006. So we've been doing this for a very, very long time. And a lot of people say, well, remember what happened in the crash? And I said, yeah, but those were liar loans. And when that happened, we kind of knew. Anybody who followed the market knew that was going to happen. The reason is that people are getting into home loans when they should not have been.
Yep. Janae, can I get a home with collections?
Yes.
Yes, you can. How do we address it? How do we move forward with it?
Well, it depends on how old the collections are, Janae. If they are recent, like last month, that's problematic. If they're within the last 3 months, still a bit problematic. But if they're 2 years ago, then not that big of a problem. I do, if they're above $2,000.
Yep.
$2,000. If they're above $2,000, I have to aggregate the collection amount and then put in a ratio. I think it's 1% or 0.5%, depending on the loan.
5.
So there's a way to deal with collections, but if it's below 2,000, I can just ignore it, like I didn't even see it. Doesn't even matter.
There's an opportunity for you today, and if you're interested in getting your application started, go to the link in our bio, click on apply for a home loan now, and get the process started.
Cool.
End of the GOAT. It's rigged for Biden because Trump wants to fire Jerome, I think. Maybe.
I don't know. I don't know about that. Well, the whole politics thing, you would think that one person would be in one person's pocket and it would be real simple. But you know what? It didn't work out very well is in the Barr situation. Bill Barr turned on President Trump like in a weird way, and so did Comey. Comey turned on him in such a weird way. And it was weird when Comey turned on him because he actually gave President Trump the election by saying that he's not prosecuting then candidate Hillary Clinton when the evidence was there, but his justification was that no reasonable prosecutor would prosecute this, which I thought was crazy. What the hell? So, anyway, Jerome Powell is not so easily replaced because it's, I think they serve for 4 years, either 2 years or 4 years. I'm not sure which one it is. But 2 years or 4 years, and they have to be nominated by the president and then approved by Congress or the Senate, one of the two.
All right. Andy the GOAT. My children and grandchildren will never get to own a house. It's tough.
Andy, if you get yourself really, really successful, just give it to them. They own it.
Here's the truth. Mariana didn't back up her statement. Mariana, I want to know why you believe it.
We want to know.
You said it's true like you
Mariana.
know. So I want to know. I want to be educated if I don't know something. Camacho in the house. I had 2 fake accounts reaching out claiming to be both of you guys. What?
Camacho.
You
know
the
what?
man.
Thank you for telling us.
We appreciate
Thank you,
it.
Camacho. Thank you. Actually, you've been a few other followers, fans, whatever we call y'all. They've told us this, and we've actually incorporated into our daily videos. So we're actually putting the videos out now saying, hey, here's the tip of the day. By the way, we go live from 11:30 to 12:30 Pacific Standard. See us and ask us the questions live. Don't believe copycat accounts.
Yep.
Thank you for that.
How many accounts do we have, Lee?
One
for Chris and Lee.
Yeah.
One, just one, and it's right here.
And it's on Facebook, it's on Instagram, it's on TikTok, and it's YouTube. So technically there's 4, but one on each platform.
Technically, but there's only 2 phone numbers that go to each of us. So if you think you're being swindled by someone, make sure to call us.
Just call us
Follow
directly.
up.
Yeah, call us. There's
Say, this is you, and I'll tell you yes or no.
Yep.
Right out the gate. Camacho, thank you. Cretella. to get a loan, you have to have 580 credit score? I believe that's a question. Do you have to have a 580
Yes,
credit score?
I am new here. Are you helping us qualify for home? Yes, we are. We're helping you qualify. Sritella. Sritella?
Cretella?
Cretella?
I'm sorry.
Cretella.
We don't know how to
Cretella.
read.
Here's how it works. 580 for FHA if you want to do 3.5% down. 580 if you want to do 3.5% down. If you have a lot of money, and you can do 10% or more down, I can go down to a 500 FICO. 500. And if you want to go Fannie Mae or Freddie Mac, or you want those as an opportunity, you need a 620 FICO. But let me say this, Cretella. If you have a 580 FICO score, something happened and there's a problem. And you may have the green light to move forward, but if you have a recent collection, like I did one for somebody who had like a 584 FICO. So by the FICO score, it looked like they qualified. But once I pulled their credit, I said, you have 7 active collections last month. They're like, yeah, can I get a house? I'm like, not with 7 active collections, you can't. That's why you have a low FICO score. So how did you get that low FICO score? If it's something that happened 2 or 3 years ago, then we may be able to just move forward, get your FICO score up. But if it's something that's actively happening right now, it may be problematic and it may prevent you from moving forward. So don't think the 580 is an automatic green light. The 580 tells me that I can move to the next step to see if you qualify.
Yeah, and news this just in. I mean, you've probably heard this is probably a good investment for you, but there's going to be 2 properties that are possibly coming for sale in Los Angeles and Miami. I don't know if P. Diddy's going to be able to keep these houses. So
What?
They may be hitting the market.
What? You think P. Diddy? Well, the thing with Trump is crazy. They tried the Attorney General, I think it was the Attorney General of New York, said, "Hey, listen, I really want to take that building that Trump owns, Trump Towers. I really want to
With his
take
name on it?
Yes, I really want to take that." And I'm like, "Oh, this is insane. This is insane." But P. Diddy's in the same spot. He's like, "Hey, yeah, I used to live in Miami, New York, and the United States. Not anymore. No, sir.
Is
no,
he
sir."
running? Is he running?
It depends on who you listen to. I never know who to believe, man. If I listen to the juicy story, he's running.
Yeah.
He went to, I don't know, Antigua or something like that. Crazy. What are the requirements for 3% down? I'm in New Jersey. Am I eligible? Well, just being in New Jersey does not make you not eligible or eligible either way. Here's what it is. 3% down is Fannie Mae and Freddie Mac. Both of those are 3% down. FHA is 3.5% down. But in order to qualify for Fannie Mae, Freddie Mac 3% down, you cannot have owned a home in the last 3 years. These are special programs. They're called Home Possible and Home Ready. And if you have not owned a home in the last 3 years, you may qualify, but it may not be best for you. The reason I say that is because if you put 3% down on a Fannie or Freddie, I then have to shop what's called MI. That's mortgage insurance. And if you have a 620 FICO, which is just qualifying, your MI is going to get ridiculously high. Not a little bit high, ridiculously high. Like the last one I quoted was probably 1.31. That's a very high MI. So that means a monthly payment, which means it's more expensive. If you have an 800 FICO, well then your MI is probably going to be really low, like 0.21, maybe 0.23. So, low FICO, high MI. High FICO, low MI. But if you go FHA, which is 3.5% down, I can tell you without pricing your MI that it's going to be 0.55. If you put 3.5% down, it's going to be 0.55. So, just like anything in life, there's a lot of math that has to be done, a lot of factors that have to be taken into account, and the most important is your FICO. Your FICO is how have you paid your bills in the past. If you paid them on time and everything worked hunky-dory, you're good to go. We're going to make it happen. But if you had some hiccups in your past, we got to solve those and fix it.
Yeah. And those of you that are maybe watching the news, kind of picking up on what Lee and I are talking about, you probably seen the Baltimore issue this morning, the bridge that got hit by a big old cargo ship. Horrible. So if any of you are out there in Baltimore, if any of your family members or loved ones were involved, prayers. We hope that gets solved fast. And was it a terrorist attack?
I don't know, man. I don't know. I never know anymore. The problem is that it's so easy to get caught up in one funnel of news. It's so easy.
It's the news.
Because if you understand that the news isn't really the news anymore, I don't know any one source where you can get just news. Because if you look at this side, it's a terrorist attack. If you look at this side, Trump did it.
And the same thing when it comes to real estate, guys.
Trump was driving
you don't drive,
ship.
You don't drive ships.
Sailing?
It was not a sailboat.
What was he doing? Captaining?
That's the best word I could come up with.
Yes,
Maybe steering.
He was steering. Trump was steering the ship. If you listen to the right news organization, Trump was steering the ship and ran directly into the bridge because there was Mexicans on there. Can't say that. Sorry.
I know Mexicans.
I mean illegal aliens. No, I'm
Trump,
sorry,
baby.
You can't say illegal aliens.
AG family.
Undocumented firearms owners.
Interesting.
Yeah.
Very
shit.
interesting. So that being
Oh,
said,
dude, reported. Oh, they're gonna report us. Andy the Goat's gonna report us.
so what the young lady Mariana said up top about the housing market going to crash, this is the same data you get from the news, guys.
Yeah.
The rule is if it bleeds, it leads, which means if there's horror inside of it, people will watch, people will tune in.
Oh,
if
dude,
it's just the weather is
a
great.
whole shitload of viewers when I started talking about Trump.
Oh, wow. If they say the weather is great, if they say the economy is great, if they say everything is great, no one will watch. So they have to give you something to chew on, something to worry about, something to be concerned about, like the housing market's going to crash.
Or P. Diddy's going to touch you.
Something.
Yeah.
Something. It's
Yes,
all weird.
Yes.
It's all strange.
Yeah.
But bye, the people that don't like talking about Trump.
Yeah. P. Diddy. Dude, P. Diddy's going to touch you.
So I'm going to create a network where they have both liberal,
Oh, report it again. Shit. Because of P. Diddy?
where they will have both liberal, far left, liberal, conservative, far right, and put them on the same platform so everyone can hear each side on the same place without having to look for data. And hopefully this cleans things up because there's a problem with information out there. It's control.
Salvador Duran, I close April 19th. Congratulations, my man. April 19th. We hope you get it. Where you at? What are we doing? I don't think we're working. Are we working with Salvador?
I don't know. Did we close that loan, Salvador?
I don't know. Are we working on your loan? If not, whoever you're working with, I hope you close it. If you have any questions throughout the process and you want somebody to give you another opinion, call us. Text us. Write something in the chat. We'll help you.
Right on.
Cool. We appreciate
you know what
today's rates 5.65.
You want to make that go back up?
What's that?
If we say things like, we love China. China's awesome. It's a cool country.
You have to say it the right way. We love China.
That's the T word, man. That's the T word. That's the T word.
What's up, Miguel? Miguel 248. You know why? Because 247 was taken. Doomsday. Who wins? Drake versus Kendrick Lamar beef, though.
What's the beef, Andy?
I
I'm
don't
not
know,
up to date.
Andy.
I'm
I
not
don't
up
know.
to
You have
It
to bring
wasn't
us
on the
up to
news this
speed,
morning,
man.
We don't know.
You have to bring us up to speed. Doomsday is coming. Doomsday. Oh, Doomsday's back.
Yeah,
we love
what's up,
Doomsday.
Doomsday? How you doing?
What's up, Doomsday? I think the name. Like, hey, what's your name? Doomsday.
That's my favorite part of this part of our business. So everyone's names.
Yeah,
They're freaking
Doomsday.
awesome.
Well, Cupcake LVR 817 is here. You know why? Because Cupcake LVR 816 was taken.
Maybe it wasn't LVR. Maybe it was
User 909
IB3.
just joined. What's up?
Hey, Alexa, play that by Future.
All right.
Play like that. Okay, so are you telling us to listen to Like That? Is that going to give us the beef? What's up, guys? All good in Richmond, Virginia.
Richmond, Virginia.
Love
we
it.
love Richmond. That
Back
song.
east, man.
That song made that. The Richmond, Virginia. The Richmond song. You got to know that song, Doomsday. You got to know that song. My son just deployed out of Norfolk, and that's in Virginia also. Yeah, I was up there not that long ago.
Were you?
Yeah.
How was the weather?
It's all right. It's okay.
Weather outside.
Yeah, it's pretty cool.
And to go live react to that song, you will go viral.
Live react to the song. How do we do that? How would we do that, Andy the Goat? Would we just say, Alexa, please play this? Oh shit! Did I just trigger something?
I don't know.
Check all the
User
check all
9090.
the devices.
I have small business. Is there advantages to using a room in my house as office?
So maybe, but there's 909. You have a small office, So if you're trying to pay less on taxes, well then you use a portion of your home to write it off. So you can write it off. That's a good reason. However, if you pay less on taxes, you have now reported to the government that I make less money. And then when you go look for a house, you are going to the government. I know it doesn't sound right, but you are. Because FHA is government, straight government. VA is the government. USDA is the government. And then Fannie and Freddie are GSE, government-sponsored entities. What happened in the big crash is the government had to bail them out, and the other side of that was they get to have some say in the underwriting guidelines. Government. So when you tell the government you're not making a lot of money, you can't turn around in the next breath and say, hey, can you lend me some money because I make a lot of money? So you have to understand the rules so you can bend them like an artist. What does that mean? Well, as a loan officer, I can add back in depletion and depreciation. So if when you were talking with your accountant, he said, hey, listen, I'm going to write off this as depreciation. As a loan officer, I get to look at your documents and go, hey, I get to add that back in. So you did not pay taxes on it because you claimed it as a deduction, but because the guidelines say I can add it back in, I brought it back in as your income, and you played the game perfectly, and now you buy more house.
Andy the Goat, are you hiring Denver, Colorado?
And Andrew,
I think he's
dude,
dropping breadcrumbs for you, man.
I guess so. So if this could be Nico.
Are you Nico?
Nico, are you Nico? I hope you're Nico. Nico's badass, dude. Nico came to me and he was selling credit repair. And he used to come face to face, and I really like this kid. He was sharp as a fucking tack, just sharp. And I told him, dude, with your level of skill and intellect, you can make a killing as a loan officer. Well, about 2 years later, he called me up and he said, hey, I want to thank you for the inspiration I have, and I'm rolling forward. as a loan officer. Bring it down.
All right, Salvador Duran. I'm from Houston.
Houston.
Salvador. We help people in
Texas,
Houston
yeah.
too. We're actually doing a pastor that runs a church in Houston right now as we speak.
Yep.
Andy said he's sharper. He's more sharp than
He's
him.
he's sharper. Is he sharper now? Or are you sharper than, I don't know. Nico's pretty sharp, man. Nico's pretty sharp. And he became I think he's a successful loan officer. I hope
He became
is.
a loan officer?
Yeah, he did.
Wow.
He called me and told
He's
me.
the one that walked into our office,
Yes,
right?
he used to come in when we were
In Ontario.
wholesale. Yeah, in the wholesale. No, he never came into Ontario. It was all wholesale. Yeah.
Okay. Nico doesn't want the smoke, Andy said.
Nico don't want the smoke. Andy's like, I'm sharp as shit. Are you an
Welcome.
LO? Are you an LO, Andy? Are you an LO? Are you an LO? Give us it. Give us it. We have a lot of LOs who follow us. A lot of them. And I'm happy about it. There's a saying that says imitation is the most sincere form of flattery. Well, I follow probably half a dozen loan officers on TikTok. And I listen to their stuff. And most of it's just fundamental, rudimentary. It's real simple stuff because when we're putting this stuff out, it's not really tough. But occasionally they'll bring something up and I'm like, I got to check that. And then sometimes they're wrong and I'm like, yeah, I don't want to be one of those police that come in and try and tell you you're wrong. Because maybe for you, you're right, but you might not be right. Yeah, anyway.
What's FA on my burner TikTok? Fake account.
For you.
Fake account on my
Fake
burner
account.
TikTok.
First, fake account on my burner TikTok. Got it. Fake account on my burner TikTok. Got it. What's a burner TikTok? Do we have a burner TikTok?
You know what a burner phone is?
You get rid of it.
Yeah, same thing.
You have a burner TikTok?
Advisor. Financial advisor.
Yeah.
On my burner TikTok.
Wait, what? Okay.
That
Anyway,
means it gives fake advice and then
Andy.
gets rid of it.
Andy the Goat, you're fun. We like talking to you. We like when you show up. So thank you for answering my question. Have a great day. Yeah, that's the depreciation and depletion. There's special ways to do this. You do need an LO that knows what's going on, especially now with the NAR lawsuit. With the NAR lawsuit, there's gonna be really weird waters and you're not gonna know who to listen to, but your LO is not in the same vertical as your realtors. Because if you came to me and you said, hey Lee, I got this realtor that I want to use, you know what my answer is? Sure, no problem. My job is to protect you, not your realtor.
TikTok user said, or is asking, are automotive finance guys more knowledgeable than loan officers?
Oh, that's cute, man. Automotive finance guys. I was in the automotive business many years ago, and F&I is a place to make a lot of money. Automotive finance guys have a very, very simple motivation. And that is
sell extended warranties.
to get as much gross as they possibly can. And this is, so there's two places you can make money in the car business. One is the mark. And the mark is pretty straightforward. The mark is, hey, we bought it for $5,000, we're selling it for $7,000, we're making $2,000.
And then sell a $20,000 warranty on top of it.
So that's part of how they make their money. But the other part, this is the scary part. They get to shop you to all these different lenders. And when they shop you to this lender, they get this kind of money back. Or they make this kind of commission. Or they make this kind of commission. And they know that if they didn't make the money on the front, they got to make it in the F&I. And if they don't make it in the F&I, the deal's not going to happen. So the automotive finance guys are unbelievably smart, but not for the client. They're unbelievably smart for themselves and the dealership. They really are. They're really smart guys. And most of them can sell pretty good or they don't make it there.
Well, that sucks.
Anyway, I hope you weren't an F&I guy, because if you are, I just pissed you and every one of our millions of users off.
All right, guys. So one of the biggest challenges with getting home loans, I hope none of you are going through this. I hope none of you are facing this right now, but it's credit. It's the challenge of credit. Most people that we're pulling right now have not the best credit to move forward. Some of them are right on the edge. Some of them are having to package it real tight. So if you have challenges with your credit, I'm going to recommend get ahead of it, okay? Just get ahead of it, because you're going to need it to buy a house, a car, get a credit card. So here's what you can do. If you know you have crap credit, you go to our link in our bio. You click on Fix My Credit. It's a credit repair company that we know, like, and trust. And they will walk you down the path of improving it. Because I'm sure you're not hanging out here because we're fun. I'm sure you're not hanging out here because I'm good looking or that he tells the best jokes, whatever the case is. I'm sure you guys are interested in buying a house. And if you have this challenge, I recommend getting ahead of it, because once you're ready and then you come to us. There may be 6 months, a year, 2 years before you can buy at that point. So just start now. I think it's going to be the best bet for you.
What's
guys.
the credit hack? How do you do it fast?
Okay, so this is for you that are on the edge. This isn't for someone that has a 500 score or someone that has a 400 or whatever the case is. Just those of you that are trying to get a quick spike and get in, okay? So what you're going to want to do is you're going to want to reach out to someone that you know, someone that trusts you, and likely mom, dad, sister, cousin, someone like that, okay? And then you're going to ask if you can get added to their credit card. A credit card that you know they've had for a while, a credit card you know they've paid on time, a credit card that has hopefully a 0 or very low balance and a decently high limit, okay? Let's pretend that you go to mom and say, hey, mom, add me to your card. And she does. And she's had this card for 10 years. When they add that card to your credit, you're going to get 10 years of good history, 10 years of making payments on time, 10 years of a high limit and a low balance, which tells the algorithm, hey, this person knows how to manage their credit. And once you do that, you'll get 20 to 60 points almost overnight, depending on the card and depending on the available credit. Now, you could do that with 2, 3, 4, 5 cards if you like. Now, here's the truth. You have to trust each other because they're giving you a credit card. I mean, literally giving you a credit card. You don't need to take it. You can take it if you want, but they're literally giving you a credit card. So it has to be a trustful situation. And know this, that if anything happens in your relationship and they decide to remove you, your credit will fall to wherever it was before. That being said, that's a way to easily, fast, quickly spike your credit to get you into a home if you're right on the edge.
Are you seeing much non-QM business? We see a lot of people who want to go non-QM.
Every day.
A lot of people that want to go non-QM. How many people can actually pull it off? Not too many. Not too many. Because non-QM, so when people come for loans, most people don't have a really good touch with reality when it comes to loans, because they were like, hey, I want to do 0 down and very low interest rates. I'm like, no, it's not how, it's a business. It doesn't work that way. So if you want like low payment, low down payment, there has to be a reason to give you a low down payment. And the reason is it's your primary residence and you're not going to walk away. Why? Because I got to move my whole family, all my shit out. I got to move out. It's hard to walk away from a primary residence. And because it's hard to walk from a primary residence, they allow you a lower down payment, 3.5%. Now, if it's easier to walk away, so let's say you have 2 houses, your primary residence and a second home. Well, if you have 2 different houses and you hit hard times, which one are you going to walk away from? Your primary or your second home? You're going to walk away from your second home. So they ask for more money down, 10% down. Now you have your primary home, your second home, and an investment property, and you hit hard times. Which is the easiest to walk away from? It's going to be the investment property. So they want 20% down. Well, this is the way that conventional mortgage work, Fannie Mae, Freddie Mac, USDA, VA, and FHA, that's the way those ones work. Now, if you want to say, hey, listen, I don't want to follow any of those rules. I want to go Alt-QM, which is Alternative to Qualified Mortgage. That's what that is. So Alt-QM is like, okay, yeah, cool, we want you. We'll start at 20% down. Everybody's like, wait a minute. What do you mean start at 20%? What do you mean start? Oh, yeah, from there we can go up. We can go up to 25% if you want. Heck, you want land? I'll take 50%. Yeah, I'll take 50% for your land. So QM sounds cool, but the standards are much higher.
It's definitely an avenue for a lot of people that can do it. And like he said, everyone wants to do it. There's so many, but there's such a small pool of people that can actually pull it off because of the down payment. I mean, the down payment's higher than your traditional financing as a first-time home buyer. But for the right person, for the right deal, it makes sense. It does work. And some people stay in the loan, to be honest with you, just because they can't get out of it.
Yeah.
Like, the goal for most is to get out of it by refinancing into traditional finance. But most stay in it because that's their scenario and that's how they make money or that's how they live.
Where are you guys at? What kind of stuff do you want to learn about? Do you want to learn how to get the lowest interest rate? Do you want to know how to pick the right interest rate? Do you want to know down payment assistance programs? What do you want to know? Ask us in the chat. We'll answer your questions.
Perfect example, user 4499. They're saying 0 down, 11% interest, 2% origination is the best that they've found. That's actually a pretty damn good deal if you're talking about 0 down. What's that product? Who's the investor? Because most of these non-QMs, the interest rates are going to hover somewhere between 8 and 11%. 11, somewhere in that range, with that origination fee, by the way. So when you're doing these non-QMs, in order to make it happen, you're going to have a higher closing cost because there is a higher origination fee. Now, zero down, I've never seen that, so I'm very curious about what this is about.
Me too, unless it's a gift of equity. And then the other part is when I tell somebody 11% interest, they like hit the roof. I can tell you right now that I'll quote something and I'm like, hey, listen, I know what I know just based off of all the experience I have. If I call somebody up, I was like, hey, yeah, I was able to do that. I was able to get you, looks like 11% interest. And they're going to be like, Lee, 11%? I heard on the news it's 5. And I'm like, yeah, no. So, you didn't D&D yet? Dude, you have one job. One job. Hold on, we did D&D. We're getting lots of calls from our millions of fans. Oh. Okay, here we go. Cool, one job, man, one job. Sounds like hard money. Yes, hard money. Okay, here we are. We got lost for a second. TikTok, Instagram. We're good on Instagram, Facebook. We're good on Facebook, TikTok. We got a couple here, and YouTube. Okay, so let's go with this one. Longhorn Investment based out of Texas. They're non-conforming HML, and they keep their own notes. Are you a loan officer? Number 4499. If so, we want to know you. Cool. We do a lot of business in Texas. Sounds like hard money, and we're having. Camacho says technical difficulties. Nailed it.
Sometimes, man.
Yeah, sometimes we have technical.
Here's the truth, guys. We're really good at loans. We're okay at pressing these buttons.
Yeah, I know.
We're okay at it. We're getting to a level.
We actually have a tech support guy who comes in occasionally, but we don't have the fanfare and business model to support a tech guy 24/7.
Questions over here, man.
Okay, cool.
Taco Dom. When's the next federal meeting? Taco Dom in the house. What's up, man? How you doing?
Say it again.
When's the next Fed meeting?
March, April, May. It's in May. I'll give you I think it's May 10th. And so
hit on the timelines that you were sharing earlier about 3, 5, what all that
okay,
stuff.
so if you go to the FOMC website, Fair Open Markets Committee, that's the Federal Reserve, and they're not really shy about saying what they're doing. They're like right in your face. They're like, this is how
right
I'm
in
doing
front of
it.
you?
Yeah. Well, there's a running back named Emmett Smith who used to say, hey, I'm not going to hide it from you. I'm just going to go straight up the middle, and you guys are going to stop me at about 5 yards. Every play. And then sometimes I'm going to break through, and sometimes you stop me a little earlier. That's what I'm going to do. Now let's do it. And he was good enough to do it. FOMC kind of does the same thing. They're like, hey, listen, we know what's happening with the economy, and we anticipate 3 interest rate reduction cuts in 2024. We anticipate 5 in 2025.
That's the big deal.
We anticipate 3 more in 2026, and we anticipate hitting the bottom of the cycle somewhere in calendar year 2026. So, wow, they've got that kind of control over the economy. And it's not, the Fed funds rate is not the only lever that they have. They have QT and QE. QT is quantitative tightening, which means they're pulling money out of the economy. And the other one is QE, which is quantitative easing, which means they're pushing money into the economy. So they kind of like, hey, I can bring it back, I can pump it out. And they control the valuation of the economy on a low level with QE and QT, on a high level with Fed funds rate. So those two things are happening, and these guys literally control the direction that our economy is going in. So that's when it's happening. Now, here's some weird conspiracy type shit. They're afraid that if they cut rates too close to the election, it will look like they're trying to side for Biden. So the odds makers are saying that the first rate reduction will happen in May. I think it's 60% at this moment. So that's the first rate reduction. The second one is right before the election, so they're not going to do it. And then the third one is right after the election. And they believe that there's going to be 2 big ones right after that. So that's kind of what the odds makers in Vegas are saying right now.
That's a big deal, guys. Here's why. Because once we start ticking down on interest rates, it is going to bring in the flood of people. But those of you that are waiting for the best interest rates, according to the data he just gave, 2026 is where you're going to see the bottom. And if people start flooding in by, let's call it summertime this year.
What's up, Darla?
What that means is that your competition is going to push those values up so high that you might be buying, let's say the house is for sale for 300 grand today. You could be buying it for 6 in a couple of years. I don't know how true that is, but I can base it on But I can base it on what we've done in 2020 and 2021. So just pay attention, guys, because the past it's very clear of what happens in certain situations.
Oklahoma's in the house.
Darla Dempsey. I know
Dempsey.
Darla, don't I?
I don't know. Maybe
Darla, do I know you?
I hope so. Darla Dempsey from Oklahoma. That's like Peter Parker. That's like a superhero.
Double D?
Yeah, Darla Dempsey.
Yes,
Peter Parker.
yes, of course I know you, Darla. Of course.
Oh, what? All investors are purchasing now because of what you just outlined. You know what? Okay, so there's this weird thing. You want to talk about? We're about to go down a rabbit hole. So for those of you who don't want to go down the rabbit hole on what's happening in the economy,
on credit score 639.
Okay, cool.
I remember now.
I remember now. That's how we know people. So, the BlackRock and Vanguard. Where'd you go? Did you die?
I left and now I'm back.
Okay, cool. I was wondering. I just got worried.
I didn't die.
So, BlackRock and Vanguard, which are the two biggest hedge funds in the world, are buying up the houses right now in this market. It's crazy. They're buying up so many So you know how hard it is for something to get to Congress and for them to actually have a vote on it? It's really hard. Shit has to be going all kinds of wrong.
Actually, it's I'm a bill on a Capitol Hill.
Yeah, but you have to make it through. You have to make
that cartoon made it look easy.
The cartoon made it look easy. So BlackRock and Vanguard are buying up the houses so much that they're actually affecting the market. So it actually hit the House of Representatives, the federal House of Representatives, and they said, hey, listen, we need to make it illegal for these guys to buy this stuff because it's hurting the average American. Wait, what? Yeah, that's going on right now. And it's under the radar type stuff, but damn, if it got to the spot where all the congressmen are going, so who is this BlackRock guy? Don't act like you don't know who they are. They gave you money. Who is this Vanguard? Don't act like you don't know who they are. They gave you money to win your freaking campaign. Anyway, it's in front of the House right now and then going to the Senate after that so that hedge funds cannot buy houses. Strange.
Yeah, but listen to what she's saying here. All of my investors are purchasing now because of what you just outlined. I should have said they're moving out of have and holds and moving into fix and flips. So this is worse, guys. This is worse. Here's why. Because they're not just going after one type of house. They're going after all of them. Yeah. Which means if you want to buy a house, the competition's even more than we thought. It's insane. Darla, you told me to go for a house more and get a hold of you. Absolutely. Let's talk. Rowdy Rich, what's a good credit repair company?
Rowdy Rich, we use 4 or 5. There's a few ways to get to them. One of them is you can call us. And we got some people that we talk to, and we send you to one of those. There's another one that we have at the top. If you go to our profile, go to links, go to Fix My Credit, we actually have a relationship with this credit repair company that we can log in and see what they're doing. The credit repair companies, it's a very big business and they make a lot of money. I'm not trying to make money off credit repair. I don't really care. I just want you to get fixed so you can get into the
We care about you
house.
buying a house.
Yeah, that's it.
Absolutely. And if you care about buying a house, we care more. Know that. That is for sure.
And if you don't care, we don't give a shit.
Yeah, and that's a fact. You don't care, I care less.
The minute you're like, hey, can you follow up with me so I can get the documents? No, I'm not going to follow up with you. No, sorry, not going to happen.
That's funny.
Yeah.
So, Darla, when are you going to reach out? Let's get the process started. Or maybe you already did. I don't know. Let's find out. We'll figure everything out.
So what's going on Facebook, Instagram, TikTok, and YouTube? We have millions of viewers watching us. We got all kinds of stuff happening. Interest rates are pretty steadfast. They're pretty steady. They haven't moved. Buying a house is still complicated but simple.
All right, over here.
Okay, cool.
What would actually cause a real estate crash?
Ooh, that's a good one. What would cause a crash?
Because we don't see one in sight.
Yeah. So, what would cause a crash if one side of the market got so lopsided and the other side did not keep up? So I'll give you an example. So let's just say that everybody wanted to sell their house tomorrow. Everybody. And there's just a flood of houses on the market. That will eventually cause a crash. Okay, so let's flip it the other way. Ton of buyers, but no supply. Prices skyrocket, then crash. However, in a balanced market, no crash. And we are largely in a balanced market. Sometimes it favors buyers. Right now it favors buyers, even though it doesn't look like it. And sometimes it favors sellers. It does not favor sellers in this market. Does not. If you're a seller, you know what I'm talking about. Because every seller wants to sell on the way up so they can overprice and it'll catch it. And you can't do that right now. Wherever you're at as a seller, you're like, hey, there's not a lot of buyers out there because the interest rates are so high. That's what's happening right now. Cool.
Time for a commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers at New American Funding, Chris and Lee. You can reach them by calling their cell phone number directly, what's on the screen right now. Call them. Let's do it.
Boom. Al Wood. Al Wood, that's from the Blues Brothers.
All right.
In 6 weeks, in process, and still in underwriting.
That sounds not right.
Seems like a long time.
Yeah, that sounds... First off, underwriting is usually only a 24 to 48 hour ordeal. So that's something. And the reason is because these underwriters, they get the file. And they get the file, it hits their desk, and they're clocked. Let's say I got the file Monday morning at 8 o'clock. When I release the file Tuesday at noon, this is how long I had the file for. Because if there's too long of a time in underwriting, they either get rid of that underwriter or hire more underwriters. So, likely what's happening is you're in processing, which is not underwriting. Processing is, hey, I need to get my verification of employment. What is my verification of employment? That means I called your job to back up what you said to make sure you actually do get this money, get this, and that. When you're all tied up, we submit you to underwriting, and then underwriting usually comes back. And they'll give us not approved or approved with conditions. And sometimes the conditions are, hey, you have to prove you're divorced or prove you're married. Hey, you have to prove you're brother and sister. That happens. Hey, you have to prove you won money from the lottery. You have to prove you've been at this job 2 years. There's a lot of things that happens, but underwriting, the actual part of underwriting is usually pretty quick. The rest of it is processing. That's FYI.
He did say that the appraisal just came back.
Okay.
So he may have received a conditional, which means, hey, get us your new paycheck stub, your bank statement.
Yeah.
What's this? Write us an explanation, whatever the case may be. And it sounds like once this appraisal is in, you should have your whatever, your CTC clear to close or your conditional again. But yes, see, that's exactly what he said.
Yeah. So yeah, and
But 6 weeks, oh god,
that's a long time
for an appraisal to come back.
That's a very long time. Yeah.
Unless there was something out, there was clearly something going on because that happens. There's other plans and different ways to go.
Stuff happens, man. There's a lot. I tell you what, if you are going through a very basic surgery, then having your normal surgeon, that's fine. Most like loans. If you're going through a basic loan, having your basic loan officer, that's fine. But if you hit hiccups and you don't have a loan officer who knows how to think outside of the box and figure shit out, you're going to fail. It happens all the time.
Or have the hard conversations.
Yeah, So when we've been doing this for such a long time that the minute we get something, we're like, hey, here's the challenge. We're like, okay, how do we beat this? How do we beat this? Okay, let's look at it from this angle, this angle, this angle. Many times I walk into Chris with a loan. I'm like, okay, listen, I've hit it from here, 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 here. I'm going to leave you alone. I'm back in half an hour. You tell me what you think. I don't want to know what he says right there because I don't want to jade it. He does the same thing to me. He'll bring a loan to me and he'll go, here's the loan scenario. What do you see? And then just leaves it with me for a while. And I'll come back and I'll say, okay, we can hit it from this angle. We can hit it from this. We can hit it. And usually we're able to solve things and make it work. We solve a lot of loans that didn't work before.
Oh, yeah. Oh, yeah. Did loans that seemed impossible.
Yep.
Do you recommend pulling permits on house upgrades? I'm going to say it depends on what you're doing. It depends on what you're doing. Like an upgrade could be like a room addition. And if you want that square footage, if you plan on selling it in the future, I would say so.
Yeah,
I always do it right the first time. Do it right the first time because if you're going to sell that house and you're like, but I have 5 bedrooms, it's worth more. The appraiser's going to go, this isn't permitted.
Yeah.
This wasn't here originally. The city doesn't even know about this. So to do things right, I say yeah.
By the way, there's a lot of people who do this to their garage. They're like, hey, I got a 4th bedroom in the garage. And they're like, yeah, you didn't permit it. And there's a rule that says I need to have $2,000 or less cost to remediate, which means I need to be able to turn it back into a garage with $2,000 or less, and I can just ignore it, but I can never give it value. So Pull permits.
Yeah. Elwood, correct. My loan officer is bad at communication.
Oh, that sucks.
Yeah. Call them.
That
Do you have their
sucks.
cell
Yeah.
phone number? Call them, text them. I mean, if they're busy, they could text back.
And by the way, 6 weeks, are you locked? If you're locked, and you locked 6 weeks ago, you might could do better.
Oh, yeah. Who'd have thought?
You might could do better. And if you would like for us to give you a competitive quote, send us the LE. Send us the locked LE.
Yeah.
Locked LE.
Taco Dom. Why are closing costs so damn expensive? I think closing costs don't get talked about enough. I don't disagree. But why are they so expensive, Lee?
Well, closing costs are expensive, relatively speaking. Because when somebody asks, how much are closing costs? I'm going to say between $8,000 and $12,000. They're like, why such a wide range? Because part of your closing costs are your property tax impounds. And if you're buying a $200,000 house, well, the property tax impounds are going to be small. But if you're buying a $900,000 house, the property impounds are going to be large, and they must be included. And another factor that's very difficult to control is it depends on what month you close. Certain months, I need to collect 7 months of property tax impounds. Certain months, I need to collect 2 months. So it depends on the month. We can actually give you the chart if you want it. But the reason it's variable is because of that. The static stuff like title and escrow, those are going to be the cost no matter what the cost is. But the variation is going to be your property taxes, your homeowner's insurance, and any ancillary things that you had added in. Like, for instance, I'm going to fix the roof or fix the this or fix the that and build it into the close. That's how closing costs get changed.
Fix the that. Also, kind of hit on them because people call these lender fees. People call closing costs the lender's fees.
And they're not. The lender has to disclose them, but the only lender fee are the things that are associated with the loan. Like, for instance, there's origination. Ours is $1,495. That's what the bank charges. And then some brokers will charge you for their underwriters. They'll charge you for their processors. They'll charge you line item for everything, and that's all associated with the loan. And those are closing costs, but those are usually pretty static. You can figure them out. Where a broker can hide fees is inside of this, and that's why whenever I say my broker's doing it for zero, he's not charging me anything. And I'm like, is he your cousin? No.
Son?
Is he your brother? No. Okay, so I'm going to ask you a question. I want you to really think about this, okay? Do you really honestly believe your lender is doing it for zero? I mean, really? Honestly? And then there's a long pause and they say, well, I guess since you put it that way, it doesn't make sense, huh? And I'm like, yeah, the fees are hidden, and I'll show you where they're hidden. But the bigger issue is, why are they so comfortable deceiving you? That's a big issue. Yeah. Anyway, how long does it take for a loan officer to get back to you? That's a loaded question because there's a thought. If you call me right now, let's say we just ended this live, and you said, Lee, I saw you on TikTok. It's happened sometimes. Lee, I saw you on TikTok. I want to put her offer in tonight. And I say, okay, how serious are you? They're like, dead 100% serious, like a heart attack. And I say, cool, we're going to find out in just a second. I'm about to pull your credit. Oh, no, I want you to pull your credit. Okay, then you're not serious. Okay, let's go back the other way. Yes, I'm 100% serious. Pull the credit. Okay, cool. I need your documents within the next hour. I need your last 2 years tax returns, your 1040s and your W-2s, your paycheck stub, and your bank statement. I need all of that in the next hour. And if you can get that to me in the next hour, I can get you qualified by tonight. Now, if you're serious, you'll have that to me in the next hour. Now, if they are, I will get back to that guy right now. You know why? Because I make a commission. I am driven off commission. So is he. We're driven off commission. So if this guy is dead set serious and wants to put an offer in tonight, I pull his credit, gets me all the documents, I'm going to be on that phone with that guy all day long, all day. Now, if there's a guy who says, hey, listen, I'm really serious about this stuff. Cool. I'm going to pull your credit. No. I don't want my credit pulled. You're no longer serious and you go into a different category. Not bad. You're just not serious right now. So, as we're moving forward, I know you're not a serious buyer. You're not high on the list. For those that are serious and ready to put in offers right now, your Elwood should be on the phone with you right now, all day, every day. For those that are just kind of kicking tires, what are rates like now? What do you think my payment would be? That's not bad. We all go through the process, but you're lower on the totem pole. How long Should your loan officer take it back to you? Depends on how serious you are.
Yeah, Taco Dom again. I'm closing next month. That's awesome, man. Congratulations. I'm going to recommend you send us your locked loan estimate so we can compete and hopefully get you a better deal. So let's do that. And you can email us right here. And then those of you who are interested in getting a home, screenshot this right now. You can also go to the link in our bio, click on apply for a home loan now, get the process started. If you have crap credit, you can click on fix my credit, get that process started. And there's a whole lot for you guys.
Cool.
All right, what's next, guys? Elwood, loan is only for $72K. Appraisal came back at $280.
Elwood, who's doing your loan? No
Risk. Risk.
Here's the problem. Most conventional conforming loans, they don't go below like 80 grand. And the reason they don't go below 80 grand is because of what's called HPM, high price mortgage. And what that means is that the fees have exceeded a percentage of the loan amount. And in Dodd-Frank, the law that got passed a while back, they said, hey, listen, your fees cannot be too much of the loan amount because that turns into predatory lending. So banks kind of steer away from, like New American Funding, we'll do them like 100,000's a line. It's not a steadfast line, but it's where HPM starts to happen. So when people say, hey, I want a $70,000 loan, I'm like, yeah, we might not be right people.
Yep, that's true. Great info here, you two. So happy to see the NAFers on TikTok.
We're here for you, Mortgage Jamie. Are you a NAFer too?
Yeah.
Mortgage
Where
Jamie.
you at?
Yeah.
Jamie?
We have a lot of loan officers that are on our feed. We appreciate you guys. If you know more than us, please teach us something. Rare, but please teach us something. If you don't and you're brand new, sit down. You might learn something.
Let's ask Mortgage Jamie. Mortgage
Okay,
Jamie,
cool.
we can have a crash soon?
All right, cool.
That's what some people say. Andrew, best down payment assistance program.
Okay, Andrew, you're not going to like this answer. You're not going to like this. I'm going to tell you what it is, but you're not going to like it. The best down payment assistance program is no down payment assistance program.
That's not a good answer.
That's not a good answer. It's not. I'm going to tell you what they are, but I'm going to tell you there's a catch to every single one of them.
That's a good
There's
answer.
a catch, okay? So let's just say I went with Platinum, okay? Platinum's a good one. It's actually a grant. They give it to you. But, hey, interest rates here are right now 6.5. Your Platinum's coming in at 9. Wait, what? Why so expensive? Because you want down payment assistance. It's not free. They're making it up in the rate. I don't know today's Platinum quote. That's just a scenario. Okay, so let's go CalHFA. CalHFA is a great program. Awesome, cool. CalHFA will give you your down payment, but it's a silent second and you must pay it back. And if you were qualified to buy a $400,000 house with your own down payment, as soon as I plugged in that down payment assistance program, they throttle it back to $320,000. But Lee, you told me you're qualified for $400,000. Yes, when you're bringing in your own money, you're qualified for $400,000. But when you're using somebody else's money for the down payment, they throttle back the buying power and they don't let you redline it because you have no risk. That makes sense, doesn't it? Everybody says, well, since you put it that way, I guess so. Because you have no risk. All loans are based off of risk. So if you're going zero down, you're using somebody else's money and the risk goes very high and they compensate for it somewhere, some way.
You're right, Elwood. Maybe that's why he's dragging. Not a big loan amount. Maybe.
Yep,
but
maybe, yeah.
But once it's in the process,
Yeah.
the system moves it along.
Yeah.
So it's not just a loan officer. Random thoughts. 15-year versus 30-year term on a conventional.
Random thoughts? Well, okay, so do you want to know the rates or do you want to know what's better?
I think he's asking better.
Okay, what's better? Okay, so here's the thing. Let's just say that you were buying a 30-year house and it cost you $3,000 a month. Cool, $3,000 a month on a 30-year fix, 30-year. And then you priced it out on a 15-year. And the 15-year is $4,000 a month. So you pay $1,000 more a month, but you paid off 15 years earlier. The right way to do this, if you want to game the bank, if you want to really have the hack on the system, the right way to do this, take the 30-year at $3,000 and then add $1,000 a month exclusively to principal. Why? Because the amortization scales tip it in the bank's favor for the first half of the loan. So for the first 15 years, most of your money goes to interest. For the last 15 years, most of it goes to principal. It's a little complicated, but that's simple version. Same thing happens on the 15-year version. For the first 7.5 years, it goes to principal. For the next 7.5 years, it goes to interest. The next 7.5 goes to principal. But by you applying $1,000 exclusively to principal, and that extra $12,000 a month will tip
Year.
it. I'm sorry, a year. Thank you. That extra $12,000 a year will tip it so that you don't only pay it off in 15, you'll probably pay it off in 13, and the bank will make dramatically less money. That's the real hack.
Yeah, so you go with something that gives you options and still accomplishes the goal versus being locked in. So that's very smart. Apple user, side hustles. Here's what I'm going to recommend, Apple user. We're almost done with this, so call me or call us. We'll talk about it. Or you can go to the link up top, click on side hustles, and it'll walk you through the process.
JWY. I am
JY.
pre-approved with Veterans United for $400K. So I won't be going here with you. I'm just here for the info. JWY. You need to mask that LO thing a little bit better because Veterans United is not necessarily bad. It's not bad. They have their own guidelines. Veterans United is a program or a company that does a lot of VA loans. A lot of VA loans. And you know what? Not against them. If you help a veteran get into a house, good for you. I had a viewer not that long ago say, hey, I heard Veterans United say that I needed a 620 in order to get a VA loan. And I said, well, if Veterans United told you you needed a 620 in order to get a VA loan with Veterans United, they are 100% correct. 100% correct. Now, if you came to me, I would tell you that if you dig into the VA guidelines, there is absolutely no FICO score requirement for a VA loan. There is none. You can find it. It's on the internet. This is not secret. But banks put in their own FICOs. So if Veterans United is telling you you need a 620 in order to get a loan with Veterans United is absolutely correct. Absolutely correct. I hope you get it. I hope you get your house. Thank you for your service. By the way, make sure you don't pay that funding fee if you don't have to, because that's the biggest downfall for veterans who do not know and loan officers who are not experienced.
Yeah. Also, the service connection. There's a whole lot of play with the loan.
Yeah.
If you have any kind of service connection, that's
A
a
lot
really
of it.
big
Yes,
deal.
a lot of it.
You got to fill in the residual correct and make sure everything's dialed in.
Cool.
All right, I need someone to translate this for me, okay? It's
Okay.
Farah J11 said, Oye, Chris, ayer te mando saludos don Juan El Mango Farias en su live. Can someone tell me what that means? And then JY said, funding fee.
Funding fee.
What you
funding
talking about?
fee.
What you
What are you
talking
talking about? Funding fee.
What you talking about?
Oh my God! You better talk to your Veterans United loan officer, because this is the scary part. I'm about to give you a little bit of experience here. Okay, a little bit of experience, JWI. Here's the experience. Okay, I'm a veteran. Okay, my dad's a veteran. My son is active duty Special Forces Navy. Bad dude. He's a badass. So I know a lot about the VA loans. I'm probably one of the best in the country at the VA loans. Let me tell you why. So let's just say that you are service connected at 10%, okay? And let's say it came in at 10%. And your loan officer is inexperienced. And he sends off for your COE, called Certificate of Eligibility. Go to the VA for it, you get your COE. And your COE comes in and it says, hey, $36,000. Doesn't matter what it says, $36,000 non-exempt. Sounds perfect, cool, they get to move forward. And your loan officer knows you just got rated at 10% service connected. If he's not experienced, he doesn't know when it said not exempt, it should have said exempt. It just hasn't made it through the VA system yet. And when he put the loan together, he incorporated a VA funding fee. The VA funding fee is ridiculously expensive in some scenarios. It can be as much as 3.3%. If you're buying a $500,000 house, that's $16,000 that you pay, that if your loan officer knew what he was doing, he would have said, no, this COE is not accurate. This COE should say exempt. Here is the service paperwork that shows my veteran is service connected at 10%. I need you to retally this so that I can get a certificate of eligibility that says exempt and save my veteran $16,000. Does that happen? All the time.
Asha the goat
Asha the goat!
just saved $13K on my funding fee. My loan officer was awesome.
Love that. I'm glad. I'm glad for you, Asha. Asha the goat. We have somebody named Andy the goat. What is it? I mean, I know goat is greatest of all time, but damn, what is that? I love it. Yeah, if you have an experienced loan officer who really knows what they're doing, this is like fundamental, rudimentary stuff. But a lot of people like to call themselves VA experts, and they don't actually understand it. And when they say, hey, listen, you need a 580 FICO score or a 620 FICO score, I'm like, you've never read the guideline. The guideline doesn't have it. It says there is no requirement. Now, the bank can put their own overlays on the top of it. They can. And that's perfectly fine for the bank. And I do know there's a lot of banks out there that put their own overlays over the top. That's because they're protecting their interest. See, the reason the VA loan is such a powerful loan, the reason it is, it's unbelievably simple. Here's what it is. Every loan is based off of risk. So if you went Fannie Mae and you put 5%, is there a risk that you could default on that loan? There is, because you don't have enough skin in the game. So anything less than 20%, Fannie Mae and Freddie Mac are going to mandate that you buy mortgage insurance. You have to. You have no choice. You have to buy mortgage insurance to insure the lender. That's what the purpose of mortgage insurance is. If you go FHA, 3.5% down, FHA is going to mandate an insurance at 0.55. You have no choice. It has to be there because they are insuring the lender in the event of the borrower's default. In the case of a VA, the VA steps in and says, we'll cover the mortgage insurance. That's what the VA loan is. We will cover it. You do not have to buy mortgage insurance. There is no mortgage insurance on a VA loan. So when I quote the FHA rates, right now they're 5.875 on an FHA and 5.75 on an FHA and 5.75 on a VA. Sounds heads up. But you know what I have to not factor in on a VA loan? The 0.55 that I would have to factor in on an FHA loan. That's the power of the VA loan, which means you have more buying power and you can come in at zero down. If you have a loan officer who understands this stuff and can explain it to you, you're in a good spot. If you don't, keep shopping.
Yeah, JY, Isha the GOAT, thank you for your service.
We appreciate
Morgan
you.
Lay,
Yep.
the answer is yes. And I'm Chris, that's Lee.
We're done. We're Chris and Lee. Appreciate you.